Morning, good afternoon, and good evening, and welcome to the third and final day of our annual banking conference with our theme this year of responsible banking. On day one, we examined what responsible banking means for banks around the world, hearing from, amongst others, Cathay, Handelsbanken, ING, National Australia Bank. And on day two, we looked at how the UN principles for responsible banking are being implemented by banks, including BBVA and NatWest. And we heard from the UN team behind the principles themselves. Two key points I took away from our earlier sessions for the benefit of those who weren't able to join us are, firstly, the breadth of what we mean when we talk about responsible banking. And I could spend the next 10 minutes talking about this alone. In fact, I've written most of a chapter of a book on definitions. But for today, let's agree that responsible banking includes, firstly, green finance. So that's aligning finance with the objectives of the Paris Agreement and broader environmental sustainability objectives, such as protecting biodiversity loss and protecting the oceans. Secondly, sustainable finance, how banks and bankers play much wider roles in supporting sustainable economic growth and the transition to a more sustainable world, as perhaps best expressed in the UN Sustainable Development Goals. And thirdly, encompassing a fully customer and community-centric, I guess a human-centric approach to banking, sort of one that goes beyond aspects of environmental and social sustainability to a position where banks are in general responsible lenders, are supporting all customers, particularly those who are vulnerable, where banks are promoting financial inclusion and education. And there is a real sense of shared social purpose and a desire to create genuine shared prosperity for current and future generations of not just shareholders, but customers and communities, the stakeholders alike. The second key point I took away from our first 2 days was the extent to which many major financial institutions in many parts of the world are already working to align their strategies, their activities, and their lending and investment decisions with the objectives of the Paris Agreement, the UN Sustainable Development Goals, and the principles for responsible banking. And we've heard some great examples of this already, especially from Ollie Holborn from NatWest and Tony from BBVA yesterday. At a global level, there are now more than 250 banks signed up to the Principles for Responsible Banking, launched 2 years ago yesterday. So happy birthday to our colleagues and friends at the UN. And the principles or the signatories now represent nearly half of global banking assets under management. There are smaller but very significant groups of banks that have established more specific initiatives, in particular the Glasgow Financial Alliance for Net Zero, GFANZ, whose 160 members commit to using science-based guidelines to reach net zero by 2050 at the latest, and set themselves challenging interim targets for 2030. And those are targets around financed emissions, not just the bank's own direct emissions. Now, despite such considerable progress in recent years, especially since the signing of the Paris Agreement in 2015 and the substantial levels of support for the Principles for Responsible Banking and GFANZ, we have to remember that sustainable finance and responsible banking still have a very long way to go, though, until they become, as I believe they must, the mainstream of finance. You know, they are still in their infancy, in the foothills of implementation, to use Ollie's phrase from yesterday. We heard over the past 2 days many examples of best practice from financial institutions, but to align finance and sustainability, best practice must become standard practice across financial services. Now, the green bond, the green loan, ESG investment and other markets may be growing, and they are growing quickly, but they still account for only a small proportion of financial services overall. You know, this week's UK government's green gilt issue was very successful, highly oversubscribed, but green bond issuance is still less than 3% of overall bond issuance, for example. Globally, lending and investment portfolios are aligned with considerably more than 3 degrees of warming at present, and the financing of fossil fuels still considerably outweighs climate finance. You know, our world is still built on an economic model powered by fossil fuels, and it's still financed on that basis. And with some 2/3 of finance overall and 90% of finance in the developing world coming from banks, as we heard from Pouleng from the UN Principles for Responsible Banking team on day one, that is a considerable problem for us. but it also represents a considerable opportunity. However, aligning banking with sustainability and the principles for responsible banking, and doing this rapidly enough to keep global warming as close to 1.5 degrees above pre-industrial levels as possible and meet the challenging mid-century and interim decarbonisation targets for banks is challenging in practice for a number of reasons. Now, let me briefly highlight 5 of those that have emerged over the course of the sessions this week. Firstly, there's the need for more consistent global approaches to policy, regulation, and especially definitions around sustainability. Secondly, there's the need for realistic global carbon pricing, so the real costs and externalities of carbon are factored in and then affect the relative costs of capital for high and low carbon firms, sectors and technologies. Thirdly, there are the technical challenges of measuring emissions and other sustainability factors through lending and investment portfolios. That's a very complex process, as those of you involved with that will know. Fourthly, there's a lack of consistent and comparable data to support capital allocation decisions. And then finally, there's the lack of capacity and capability, even within the largest, best resourced financial institutions to support this agenda. And that's something that very much came out over the course of the first 2 days and is where I'd like to focus today. And I hope point us towards some solutions. So 2 questions. Firstly, how do we build the capacity and capability we need to align banking and finance with the objectives of the Paris Agreement, the UN Sustainable Development Goals, and the principles for responsible banking? And how do we turn best practice into standard practice across financial services? Part of the answer lies in appropriate governance, leadership, and aligning incentives with these. But most of the answer, I believe, lies in upskilling and reskilling, in education and training, which is, after all, our core activity here at the Chartered Banker Institute and has been since 1875. So I think we and our fellow banking institutes around the world, some of whom you'll meet on our panel in just a few minutes, have plenty of relevant expertise on the subject, as well as some strong views about it too. So let me share some of mine. Now, in the specific context of the transition to net zero, UN Special Envoy Mark Carney, the former governor of the Bank of England, has called in the COP26 private finance strategy for a realignment of the finance sector so that every professional decision takes climate change into account. This isn't just a strategy for COP26 to be held in Scotland some 40 days from now. It's a strategy beyond COP26 to align finance with the objectives of the Paris Agreement. As Steve Pateman, our president, told us on Tuesday, to pass what we call the Carney test, if every professional financial decision is to include climate change, then every finance professional needs to develop their knowledge and understanding of climate change, green finance, sustainability, to the extent relevant to their role and organization. This then needs to be applied to advise, to finance and support customers and communities as they transition to more sustainable, low carbon futures. In other words, to mainstream green and sustainable finance, we have to mainstream green and sustainable finance knowledge and skills too, to turn best practice into standard practice, which implies upskilling and reskilling not just small teams of ESG and sustainability specialists, but all bankers, or at least a very substantial majority of bankers. And I think we must be equally ambitious in terms of responsible banking more broadly, encompassing but not stopping at climate change, as we've heard throughout this week. So to pass what I'm going to call the Thompson test, then every banker needs to develop their knowledge and understanding of the much broader area of responsible banking, including green and sustainable finance, but also including responsible lending, supporting vulnerable customers, promoting financial inclusion and education, and understanding the ethical and social purpose of banking and finance. And then also apply this knowledge to advise, to finance, to support customers, businesses, and communities, with the goal of creating shared, sustainable prosperity that encompasses economic, environmental, and social aspects. This doesn't, I should stress, require all bankers to become deep ESG or sustainability specialists themselves. And it doesn't require doubling, quadrupling, or even increasing tenfold the number of specialist sustainability professionals working in finance. Because though that will help, it's not going to move the dial sufficiently, and certainly not quickly enough. What it needs is banks and bankers using their professional knowledge and skill of banking, of credit and lending, of investment, of risk management to do what we do best, That's transforming savings into productive investments. In this case, lending and investing in sectors, in firms, in technologies, in projects that generate sustainable environmental and social returns alongside financial ones. This isn't philanthropy, it's not CSR, it's about applying the universal principles and practices of professional banking through a lens of sustainability and responsible banking to generate both financial returns for shareholders and sustainability returns for society. And I'd like to underline that point. This isn't philanthropy or CSR, it is simply good business. But this means that all bankers everywhere need to develop their knowledge of green and sustainable finance and responsible banking so that what is currently thought of as best practice becomes standard practice, the new professional norms that banking and finance are built on. So that's our capacity and capability challenge, one that is substantial even in the most developed banking markets, but one the UN, the World Bank and others see as even more of a barrier in emerging markets where banking and capital markets themselves are underdeveloped. Meeting this challenge of capacity and capability requires an ambitious collective response that matches the collective ambition of finance sector initiatives and coalitions, such as the Principles for Responsible Banking and the Glasgow Financial Alliance for Net Zero. In fact, the two are linked, as the PRB will not be embedded in finance and GFANZ members will not meet their commitments without dramatic and sustained investment in upskilling and reskilling. And that's where we come in at the Chartered Banker Institute. And that's where our colleagues and partners in banking institutes worldwide come in too, because we can, and we do, bring together the core banking skills with the knowledge of green and sustainable finance and responsible banking needed. It's a priority for us all because responsible banking is undoubtedly the future of banking, but it is a future that depends on us dramatically increasing that capacity and capability, upskilling and reskilling all finance professionals so that a culture based on green and sustainable finance and responsible banking principles and practices and values is developed and sustained throughout banking. Again, so that what's now best practice becomes standard practice. Only then will we truly align finance with the objectives of the Paris Agreement, the UN Sustainable Development Goals, and with the UN Principles for Responsible Banking. And we must align finance with these because all of our futures and the futures of those who follow us depend upon it.